Welcome back, everybody, to the Real Collective Podcast. As always, I'm Sean Tasse, joined today by esteemed special guest, Kyle. Kyle, thanks so much.
Going on?
Too much, man. Just having fun, checking in, talking about real estate, talking about mortgages. You know how we do. This is always what's on our mind. As always, guys, of course, hit that like button on the channel, subscribe to the channel, share this with someone who you think might be interested in what's going on. If you're listening on Apple Podcasts or Spotify and you have not downloaded the entire collection, feel free to do that as well. And you can hit both of us up. You can find our Calendly links below if you'd like to schedule your own private meeting with either myself or with Kyle. Yeah, how you feeling, Kyle? What's going on? How's your world? What's new and exciting?
Nothing. Mortgages are very boring. There's nothing going on rate wise. It's been the same for 15 years. Yeah, right. Yeah, that would have been awesome to say that and mean it, but that's obviously not the case.
Thanks for tuning in, everybody. Have a great day.
And we're done. Yeah. No, it's I mean, you know what? It's an interesting time that we're in. And I mean, I know we're gonna end up breaking it down, but it's definitely been a change. I think if there's one thing I've said to people before, and this encompasses like where we are today, is that I got into this business 13, almost 14 years ago. And if I were to look back 14 years and even count up year to year, there's been a significant change in some respect of how we, as you know, an industry, approve people for mortgages and how much money they can get, or market shifts and all that stuff every year throughout that 14 years. Like I've never had 1 year the same from 1 year to the next, to the point where there's a deal I could do last year that there's no way I could do this year. And I can say that every year, year over year. Like if there's something that is true, it's that our lending environment has never, ever been consistent, which is super interesting to me when I look back on it.
Well, it keeps you on your toes, right? It means like you don't get bored about what you're doing. It's funny. I was looking at the graphs and the charts going back to 2005. I was looking at that this morning, and 2005 to 2012 had a bit of a rise, 5 or 6% per year, give or take, and then 2012 to about 2018 was just flat. No growth, no nothing. And then 2019, it started picking up. And then you're starting to see this really neat shape begin with this ramp up in 2019 and 2020, where it hits a peak and then does a bit of a valley and then hits a higher peak and then drops all the way back down to the same valley that it hit previous to that higher peak, and then as a second peak that matches the first peak that it hit the first time. So I'm interested to see, that's where we're at right now. I'm interested to see what it's going to continue to play out like. I don't think that we're going back down to 2018 prices. I think we're sort of going to find a level off or in and around where we're at right now. That's my guess, but I don't know.
When you're looking at that, are you looking at what statistic is that? Is that Ottawa, or is that bigger, like nationally or provincially?
Or only Ottawa. See, I think the problem with a lot of the news stuff that people are getting into is they're doom and gloom, and a lot of it is Vancouver and Toronto based, and not a lot of it is specific to Ottawa. So I mean, I tell this to clients, right? When you go back and you look at 2008, 2009, when there was that big crisis, there was one city in all of the United States that was not affected by the price changes that the rest of the country was. And it was Washington, D.C., right? And during that time, Ottawa was steady Eddie, just even growth, blue chip. We've seen some crazy stuff that we're not used to seeing in Ottawa. And I talk to realtors, I've been in the business for 40 years and I've never seen this happen before, right? So it was a big, significant thing that happened in terms of our prices. Essentially, what I think has happened is they've done this. They were like, okay, we're about steady and jump. And we're what do you call it? Like oscillation, up, down, up, down.
Yeah.
I think is the market trying to find, okay, well, what is our new steady Eddie price? It's just at this newer price, and it's really fluctuating around seasonality, around rate announcements, rate, It was the other one in 2020 where they're like, oh, you can't borrow for 30 years anymore. Like they put
Yeah, it's
different.
just it's a combination, and I think it's the same thing in our industry, right? Like people love to push. I mean, bad news sells. So
Yeah,
when they start talking about big crashes and bubbles, like, and that's the thing, like, are we in a bubble nationally? Okay, right? Which is driven by like 3 to 5 markets,
yeah,
right? Like if you've ever done statistics,
yeah,
right, you know that that sample can be skewed. There's a high end, there's a low end, and here we are in the middle. But if
yeah,
we eliminate those, how
yeah,
is everything else doing? And in Ottawa, especially too, like, yeah, I think we are in an interesting, our own bubble, or I don't use that word, ecosystem
yeah,
kind of
yeah,
thing, because it has been smooth. We have seen the rise. We never, I don't say never, we rarely see the big dips, right? And if we do, I think that even as a subset is more like in pockets, like high end homes, right? We see that come down. And then you see big jumps and big activity on the townhouses, because that's the most affordable thing
yeah.
there. So of course there's going to be more action, right? Which skews numbers again. So it's people really have to be careful about what statistics they listen to, where the information's coming from, and kind of like, I think it's the way of social media, and it's the way that everything is like, you hear that and then go, wait a minute, I'm gonna sleep on that before I get all wired about it,
I
and
feel
then
like a
and
lot of
do a little bit more.
people don't sleep on it. They're just like, oh, read the headline. Okay, perfect. Share. Now I've done my
Yeah.
due diligence and help, and then it spreads like wildfire. This almost misinformation or improper reading of the data. We definitely did have the biggest reduction that we've seen in prices in probably 40 years, where it went down by 20. We never seen prices go down by 25%, at least since 2025, like 2005. So in the last 20 years, for sure, the biggest drop that we've seen by going down 25% from whatever it was, March or April last year until the end of the year. But it was identically paired with the rise that we'd seen leading up to it, right? So it's kind of like, yeah, you came down what you went up by. And now we're finding that new sort of harmonious middle spot. And I think that's where we're at. It's it's a lot of fun. I wanted to this is a terrible segue, but I also wanted to let everybody know that you've been a mortgage broker for 14 years. I've been in real estate for a decade, and we first met in a sales environment.
Oh, we're going there. We're
Yeah,
going
why not?
there,
Yeah,
are
yeah,
we?
yeah.
Okay,
Yeah, I
we're
think two
going there.
weeks ago. In a sales environment where we were selling knives door to door. And if there's no better way to cut your chops as a salesperson than going and selling these knives to friends and family, I
And
can't
you
think.
know what? I still say to this day though, like, is um that experience for anybody younger, right, who wants to learn,
Yeah,
that experience has been absolutely invaluable. Like, I don't give a lot of compliments. I should probably compliment people and things more than I do. Like, but that experience, like, literally changed the trajectory for me. I've always been outgoing, but to learn how to do that kind of stuff, right, is wild. And it was also an amazing switch to be like, how um how conviction sells, right?
yeah,
Like, what were we were 20, 21 years old respectively, whatever
yeah,
it
yeah,
was, right?
yeah,
We were that age,
yeah,
and selling kitchen knives to people. I'm like, I cook ramen, like I cook, like I might barbecue hot dogs. The
yeah.
do I need a knife for,
Right.
right? But I'll show you how well this cuts through rope, and baby, oh, I love that thing. And I still have them. I love them. It's the best experience.
Yeah, listen, absolutely. The one thing that I found super helpful and that I learned about it was I learned the value of a CRM being more than just like recipe cards in a box,
Yes.
right? Like that's legit how we operated. This is
Yeah.
25 years ago at this point. And the value of client acquisition,
Yeah.
right? And that's, and we just had a podcast last week where Ali is the new guy on the team, and he was talking about, hey, how important is it to always continue to focus on client acquisition? And I'd say we're both really good at what we do, like really, really good. And we still need to do it. We still need to bring on and acquire new clients, because you can be the best real estate agent in the world. You can be the best mortgage broker in the world. But if you don't have someone to practice with, there's no
And
benefit, right?
and you know what? It's amazing how many people that that don't know what you do. And you'd sit there and go, I've been doing it for 14 years. I pump out content on 5 different social media platforms. I post daily, and I still have people that call me and say, hey, you still doing that real estate thing? I'm like, I think it's mortgages. Oh, really? I'm like, wow, I'm not working hard enough. Right. And it's like, you constantly have to remind people about what you do. Like I said, like no one's going to promote you like you're going to promote you. Right. Like we were joking, right? Like branded shirt, because no one's going to do that but me. So yeah, exactly. You know it.
Yep.
So that is the thing. You have to, you always have, you never stop. You never stop trying to
Yeah.
show what you do, for
Well,
sure.
we're both young, right? Like we've got a lot of runway before it's time to retire. So it's a question of push and go. And it's hard because I think we're both very similar in the way that we operate, where it's like you don't want to be pushy, right? We want to come from a place of being educational. Hey, here's information for you. Here's the sort of stuff you need to know. Here's the thing that you might not be thinking of, but the questions that you should be asking. Here's some stuff for you to focus on so that you can put yourself as a consumer in a better spot, right? Always thinking about new ways to innovate, or help people overcome concerns or fears or whatever it is that they might have, so that they can move forward and do what it is that they want to do, whether it's get a mortgage, get a house, sell a house, whatever it is. I think a lot of the times we're both coming from that client service point of view, and it's hard to thread that needle of being that person while also not sounding like, hey everybody, hey everybody, hey everybody, you know what I mean? So it's and getting to be that annoying salesperson, right?
And that was one of the things we learned when we were selling knives too. I thought was, again, it's that conviction. Like for myself personally, like there's a lot of great mortgage agents out there. There's great finance people that work at the banks. And there's no disrespect to them at all. It's just, I find it wild that you don't want to talk to me about this stuff. I'm like, what? How could you not want to talk to me about this
Yeah.
stuff?
Yeah.
Right. Like, it's just putting that out there
Yeah.
of, I'm like, I will talk your ear off about this at a party. I don't care. We go out and my wife's like, oh, you're going to talk about this stuff again? I'm like, yep. Because like, it's what I know. It's what I love. And I honestly think that I have something to offer to people that they might not think about, that they might not know. And I think it's wild if you don't hear this from me. You may not work with me, but I still think you should hear about it. Right.
Yeah.
Whatever that is. And it's and that's it. So it's that conviction of like, I really think I'm putting something out there that you need to hear about. And it's up to you to do with it what you will. But at the end of the day, you got to hear about this. And
Well,
that's my
yeah.
whole thing.
And the thing is, like, we love what we're doing, right? Like we're having fun about it. And every week there's some different nut to crack, right? There's some different, like, oh, hey, let's figure this out. And it's cool. And it's so hard in this business where you're like, man, I figured out this solution and I couldn't believe that I was able to come up with it. Who am I going to share it with? Nobody else
Nobody.
cares.
Yeah,
Right?
nobody cares.
It's
Nope.
like, I want to tell someone if they, what do you do for work? Oh, I do this. Let me tell you about a cool thing. Like, no, I don't care. It's like someone tells you, hey, I'm in IT. Great.
Yeah, sure you are.
Yeah.
I just turn on my computer and it works. I'm in IT.
Yeah.
That's amazing. Yeah. It's like that. There's like a meme, or it's a recording. I think it was Mark Stone when he was playing for the Sens, and they, like, team scored and he's in the middle of the bench and these guys are hugging, and like these guys are hugging, and he's like, yeah, yeah. He's like, ah, woo. Because like that's what it feels like sometimes. Is I'm
Yeah.
like, I just did this, and I can't tell anybody because they're like, well, I don't get it. I'm like, yo, you have no idea. So you're
Yeah.
just like reaching out to other broker buddies, like, you know what, I just did this and that. It's like, ooh, ah. So
And then
that's,
they're
yeah,
like, I don't
dorky,
care, man. I'm
very
doing my own
dorky.
stuff. Yeah, yeah. Yeah,
Yeah,
it's
yeah.
interesting. All right. Well, this is a lot of fun. We'll take a quick break. We'll jump back in the second half and get into a little bit more about sort of what those things are, what we're going through, what we're seeing in the market. There's a rate change. By the time this posts, I think the rate change, if there, sorry, there's a rate announcement that will have been announced. So we'll talk about what the effects might be, what we're sort of our predictions are when we're recording, and what they might be, and what effects that might have in the second half of the Real Collective podcast. As always, hit that like button, subscribe to the channel, and download on Apple Podcasts or Spotify. Share this with someone who you think might be interested, and you can schedule an appointment directly with Kyle or me in our Calendly links below, and we'll catch you on the flip side.
This episode of the Real Collective podcast is brought to you by Real Collective. Real Collective brings together best-in-class real estate agents and collective experts in the field to deliver the best possible service to our clients. We govern ourselves with honesty, open-mindedness, and compassion. With diverse skill sets, our agents are able to better serve a wide array of clients, including first-time buyers, first-time sellers, transferees, estate sales, investors, and rural, vacation, and luxury properties. Authenticity and transparency are pillars of our process, which allows us to put our clients at the center of everything we do. Our years of experience and knowledge allow us to deliver prestigious service and optimal results. If you are interested in buying or selling your home, contact us today at realcollective.ca.
Welcome back, everybody, to the Real Collective podcast. The second half is bound to be at least as good as the first half, with Sean Tasse and Kyle Miller. And if it's not, you can make a comment down below and say how crappy the second half was by comparison to the first. So we're going to talk a little bit about, there is a projected rate announcement. Is that on the 5th or the 6th of September?
6th.
6th? All right. And I think it seems like most pundits are believing that we're going to either hold steady or go up a quarter. Is that what your thought is?
See, it's interesting because I'm hoping that they hold steady.
Yeah.
If they let their current trajectory and their current assessment of things drive their decision, then they're going up again.
Right.
But this is where it gets odd. Like, because one thing I want to make sure that I push out all the time is, and a lot of people don't hear this, or if they don't follow me on social, they wouldn't see this. The language we use needs to be really specific, and this is where confusion happens. Because what I mean by that is, people will say, I got a lot of agents who will reach out and be like, "Hey, what are the rates going to do on the 6th?" And the fact of the matter is, the Bank of Canada controls one rate only. That's it. It's the prime rate. So if you're on a variable, you're really listening to that because you want to know what's going to happen with your mortgage. Like, mine's gone up, whatever, every time it's gone up. So like, I'm listening to that very closely to see what's going to happen with my own payment. But if you're someone who's in on the fixed rate, right, and you're in the fixed rate market, you are like, that is the end result. Your fixed rates are taken care of by the bond market. And the bond market reacts to the expectation of what is going to happen.
Yes.
So if you're like, I better get, like, I have a lot of people on the 5th or 4th, they're going to reach out and be like, "Hey, I need to get a pre-approval and get a rate hold." And why? Well, because all the rates are going to go up tomorrow. Dude, they went up 6 weeks ago and have been going up steadily since. You missed the boat. You're going to get today's rate, but you're not getting anything better because that's gone. Because that runs on speculation. Right. So coming back to that, why I don't know what's going to happen is because the bond market, at least on the 5-year bond market, it's been dropping the last 3 days.
Right.
So that, to us in our space, means that the market is pricing in a hold or a decrease, but it's literally speculation. Well, so that's what we don't. That's the part where it doesn't make sense, because you've got someone over here saying, "Wow, we're probably going to go up." But you've got the bond market, which are the people who are way smarter and more speculative than me, saying, "Nah, it's going down." And they're owning that price. Like, they make that judgment. So it's wild. Like it's the Wild West, it feels like.
I think people need to draw a clear distinction between fixed rates and variable rates, right? Because every time the Bank of Canada does an announcement, there's this whole thing that happens, because that is a big deal for a lot of people. It happens a couple times. It's like a very special day that happens, and it's something that everybody focuses on. But like you said, that only affects the people who are in the fixed world, and only affects people who already have a mortgage in place. It doesn't affect everybody who's looking for a mortgage, because a lot of people will want only affects the variable world. Only affects the people who will want a variable mortgage. Like you said, the people who are looking for a fixed rate mortgage either have a mortgage in place right now and have had it for 2 or 3 or 4 years, and these rates have zero effect on them, except for potentially whatever they might be down the road when it's time to refi. But I mean, like I looked at with the graph, if the house prices go up, but then when you're ready to refi, they're back down. It's like, what's all the hype for, right?
Well, I think you have to, and my suggestion to everybody, and it's what I talk to my clients about too, and even just the information I put out, you're putting yourself into one of, let's say, 3 buckets, right? Yeah. You're either someone who has a mortgage and has, you just got it a year or 2 ago. So you're looking down the road.
Yeah.
Then there's people who have mortgages today who are coming up to renewal. So in the short term, right? 6-12 months.
Yeah.
Then there's the people who are buying and need a mortgage, right? And they're all at different stages, and they're all going to be affected differently by how this stuff works. The people who are, and then again, as a subset of those, are you fixed or are you variable?
Right.
Right. So the people who already have mortgages, right? They're not worried about, are they worried about this? Yes, but not today. If they're fixed, they're worried about it down the road. And what do we have to do to help them if we assume that these rates are going to stay higher for the period of whatever time they have left? How do we manage that? Then there's the people in the short term. They're going to feel this pinch way more because they're like, getting a little tight out there, right? Like they have to be handled differently, and that is going to affect them. And then there's the people who are buying, who quite honestly are literally in the situation of, what are the rates? Okay, cool. Can you afford it or can you not? Like, it's that simple at the end of the day. So everybody's going to be affected differently, yet the information gets disseminated like everybody's in trouble. Everybody, all. And it's like, it's not everybody. It's not all. It's not all the time. We have to really take a step back and be like, what's my situation? Where am I in this cycle to figure out how bad or not bad it is?
But like you said, man, that doom and gloom sells, right? So the idea of the rates are going up, the sky is falling, let's get a whole parade of all the chickens and ducky luckies and everybody going through and saying, like, the sky is falling, the rates are climbing, the house prices are going down, I can't do this. Like, I was talking with someone like, I first reached out in 2019 where I wanted to buy a 4-bedroom single house with a 2-car garage in Canada Lakes for $650. Right, those are like $1 million now, and it's like, she's like, oh, it's so terrible, and now the rates are higher, so I can't buy that house. The house prices are higher, so I can't buy that house. Everything is working against me. And I'm like, well, you should have bought it back in 2019. The second piece of advice I can give you is, you should buy it now, because the prices now are lower than they were, earlier on, and they're climbing. So, I'd say to someone who's considering, or is like, oh, wow, I really missed out, get on that property ladder, right? Get into home ownership, figure out a way to do it, and stop saying, oh, well, the prices are too high, the rates are too high. You can't control the prices. You can't control the rates. You're paying money monthly somewhere, right? Just do it.
We were talking before we started about, the feeling, and that's where we are now more than ever. Yeah. Is everybody's feeling like, well, I feel like there's going to be a crash, or I feel like that prices are going to keep going up, or I feel like my situation is this. And without dropping an F-bomb in here, like, forget your feelings. Like, fuck your feelings. It's not, because the thing is that the math behind this doesn't care.
Right.
The math doesn't care about what your feelings are. You are in a situation, right? Like we see it all the time. We not see it all the time, but it's coming, right? The people who bought 2 years ago, peak of the market, 1% and 2% interest rates. Their problems not today, but their problems coming.
Yeah.
So what are we going to do today to help them prepare for what's coming? They are not going back down to 2%.
No.
The problem we have is because we left them there for that long, right? Yeah, COVID too, but for the last decade, rates have been artificially low, and we've set ourselves up to fail here, unfortunately. And now just got to deal with it. But they're having their own problem, and they're like, well, I want to keep my amortization moving forward, and I want $1,000 car payment and can be affordable, and it's like, nope, it's not it. Feelings are done. It's now time to just hammer down and find the math that works for you. Because you're going to get a ton of people who are like, oh, you should do this, or you should, right? Fuck that. You should do what you should do, right? And whatever that is, if your problem is cash flow, find it. We'll do it. We can re-amortize the mortgage. We can get a second mortgage, and people freak out about that. Don't freak out about it. It's just math. If you need cash flow, we can find it. If you want to jam your amortization lower, great. Your payment's going way up. Well, I don't want that. Well, then you can't do that. It's the math. It's not your feeling anymore. And that's a huge thing I'm punching people in the face with today. In the nicest way possible. But
yeah. And it's funny because a lot of the times, when we're working with buyers and sellers, we're like, hey, you know what? One of the things that we do differently for you as a consumer is allow you the space to have whatever feelings that you want to have around this process. When you're selling a house, you already feel really like, oh, this sucks. I'm selling this place, and you feel a sense of connection to it, right? And when you're buying a house, like, hey, I'm excited. I'm getting a new place. This is great. I'm anxious. I'm nervous. I'm all of these different things. We're like, yeah, we're the type of agents that will allow you to have that emotional experience, whatever it is, and feel safe about having it. And it's funny. It's like, okay, good. Now you leave us. Now you go and talk to Kyle. You talk to the money people, and it's like your feelings are done. You can leave your feelings with the real estate agent. Talking about money. Fuck your feelings, right?
and again, and don't get me wrong. I'm gonna ride those emotions with you, right? Like I'm not immune to this. Like
sure,
I've seen my payment jump $1,600 on my own personal residence. I don't have a silver bullet. Like I'm right here with everybody. I have a mortgage, right? So I'm right here with everybody going through this. And it's not to say I don't get emotional about it too. Like I'll sit there on the 6th and go, damn, or woohoo, like I'll be that guy, right? But the thing is that at the end of the day, right? At the end of the day, you can have your emotion, but the math doesn't lie. So what problem are we trying to fix? Where do you fit in this cycle? That's what we're doing. We can be upset that it was better before, or it's worse down the road, whatever. But at the end of the day, you find your bucket that you're in, you find your problem, we solve your problem, and that's that. The biggest word I'm using right now, quite honestly, with everybody, and I don't say that lightly, I mean every single client, you will compromise on something. You will compromise on something. You're not going to get, and I don't mean that necessarily negatively, but right, something has to give. Something has to give, and you're going to compromise, whether it's, you're going to extend your amortization back, which you didn't want to do, but the cash flow says you have to do it. You're going to do it. You don't want to have the increased payment, but you want to have that house paid off in that many years, then you're going to find a way to make that extra payment work, because that's where we are. That's where you are. You thought you were going to pay it off 5 years sooner. Well, guess what? You're not. I'm going to go get that car. Nope. Maybe you're not. Maybe you are, but maybe you're not. And that's the balance we're striking. Gone are the days of I can have that big mortgage with that nice low payment for that long and have all this. Unfortunately, it's not. That ship has sailed, and it's going to sail for a while. So now we're just back to reality, and we're going to work with everybody's situation. And I don't know if that was truth bomb, but
no. Hey, I think it's valuable. From what I understand, there is a sweet spot for rates to be in. and that's somewhere between 4 and 6%. And it doesn't just have to do with people's individual circumstance. It has to do with the whole, like how everything's built. Like our entire economy is built on, this is the right spot for our interest rates to be, so that everything doesn't fall apart. And when the interest rates were so low, there was a piece that we're missing. And when the interest rates are too high, nobody can afford it, right? So it's like finding that sweet spot. And it's, from what I understand, it's somewhere between that 4 and 6. I don't remember where I heard it, but in that range. And historically, that's where we had been before the rates came into this drastic low. And now, just like the graph that I talked about at the very beginning, now they're hitting something that seems to be maybe a little bit higher than that 4 to 6. I mean, some people are having to qualify now at 7, right? And it's going to find its happy medium where it wants to be. And so, sure, there's some crappy stuff that's happening right now, and there's some compromise that people have to make. But you know what? This is life. This is the adulting that we have to do.
I kind of equate this, and this isn't, I don't think this is necessarily fair or 100% accurate.
Sure.
But when we look 20 years from now, when our kids are older and we start talking about, oh, I remember when, right? This part of that cycle is going to be our version of what our parents and grandparents did through 80, 81, 82, right. 90 to 92. Yeah. That's what this is going to be for us, right? That's going to be the shock, the awe. That's going to be our moment of where that was. And we also, if you bought a home, like if you bought a home in the last 10 years, right? You're also going to be the person who gets to say, holy crap, like I had a 1% interest rate, right? Like I had almost free money. And then this happened. Yeah. So we've seen that massive swing, but that's going to be our 80, 81. Yeah. And the thing is, some people got hurt, and that happens. That will happen. Yeah. And we're going to have to deal with that. And you're going to try to put yourself in a position where it's not you. And that's the thing. So that's kind of that's the way I view it. And if we can get ourselves off the emotional roller coaster, which is hard, don't get me wrong, I ride it every day too, right? But get down to the numbers, they don't lie. Yeah. They don't lie.
Yeah. That's perfect. I think it's a good place to wrap. As always, guys, we'll see. Maybe we'll do this again next week and keep maybe do like a breakdown of, hey, it actually happened. Here's what it means to you and your buying power and all that sort of stuff. So if you
that'd be good.
Yeah,
I would like to do that for sure. Yeah, that'd be wicked. Nerd out. This will be great. Yeah. Super exciting.
Yeah, for the 3 people that watch this podcast. Anyway, if you guys are liking what you're hearing, feel free to hit that like button, subscribe to the channel to keep up to date with all of these, as well as new listing videos before they hit MLS. Share this with somebody who you think might be interested in this kind of information. Download us on Apple Podcasts, Spotify. Click that little star button so you can see what's up. And you can schedule an appointment directly with myself or with Kyle in the Calendly links below. And we'll catch you in the next one. And until then, keep it real.
Collective.